All right, what is up, my friends of the Total Debt Freedom world? It's been a while since I made a video. I've been very busy. So in today's video, we're going to cover how to determine what your credit score is. And credit score is very predictable. I've been doing this for almost 15 years now on the helping people get out of debt side. Prior to that, I was in the credit collection business for another, I don't know, it was roughly 10 years. So I get how credit works, okay? When I first started the business, we did a lot of stuff for people who were taking money out of the equity in their home to refinance to pay off credit card debt. So we often saw credit bureaus when they had the debt, and then we saw the credit bureaus a few months later. Sometimes it was close to a year later when they had no debt. So I'm very, very familiar with what happens when somebody owes credit card debt and then it is paid off and how that affects their credit score. And it always, always, always behaves in a very predictable fashion. In fact, it's so predictable that the Canadian Association of Mortgage Professionals approached me to put together a training course for their agents so they understood how credit works. So I'm going to show you in this video today in very, very simple terms so you understand. I mean, one way you can go find out what your credit score is by going to Equifax or any other credit bureau that reports a score, a FICO type of score, through the information they collect from your credit card companies on the report. And they'll tell you on a scale of, you know, anywhere from a low few hundreds all the way up to highs like 800, which is a very good score, what your score is. The problem is some people don't have access to a credit card, or they don't want to pay the 25 bucks or whatever. So in this video, I'm going to show you how to figure out what your credit score is based on your debt. And the reason why we're doing this today is I'm going through this exercise because there is a vast number of people that are completely confused and have been fleeced by the credit card companies over the years and led to believe that even though they're making some payments on their credit cards, that they have good credit. They think as long as they follow the prescription of doing what they've always done, which is literally always getting them what they've always gotten, which is bad credit and lots of debt, everything will be fine. So I'll show you how this works now. Basically, we're going to use two scales. We're going to use this scale over here that goes up, and we're going to say this is debt, okay? This would be zero debt. And let's say the limit on your credit cards is, I don't know, it's $25,000. And that's the full limit that you owe right there. Okay? Over here, we're going to use this as score. Let's put this at 800, let's say. So 800 would be a very good credit score. And as your debt increases, okay, your score goes down. We'll put this at 400 is a really low score. Okay? So essentially the way that credit score works, one of the biggest weighing factors, about a third of the weighing factor, is how much you owe. Okay, it doesn't even matter if you're up to date, if you're on time. It doesn't matter if you haven't changed your residential address for 10 years and been at the same address and demonstrated that you've got stable residency, which is good. Credit card companies like that. It doesn't matter if you have a good job or any of those things. The single largest weighing factor in credit score is how much money do you owe. Even if you're making your minimum monthly payments on it, how much money do you owe in total? So if you owe almost no debt or very little debt, or you're paying off your credit cards in full every single month, you're going to have a very high credit score. But what ends up happening is these lines intersect over time. So once your debt load starts to increase, and I know that people don't get up in the morning and say, right, I'm just going to screw my creditors, not pay my bills. It's something in life happens. I get it. I've been doing this for a long time. I fully understand bad business decisions, a divorce, loss of work, you're injured, you couldn't work, whatever it may be, I get it. Something happens and the debt load starts to go up. And what ends up happening as the debt load goes up, even though every single month you might be throwing some money at it, thinking that you're placating the credit card companies or the banks and they're getting what they want and they're happy with you, you're right, they are very, very happy with you, and I'll explain why in a second. Your credit score starts to go down to the point where it's worth absolutely nothing. The problem is people get absolutely confused on the facts of credit. And they seriously believe that even though they might have a ton of debt, which might be at their limit, okay, $25,000 limit on their 3 credit cards, let's say, and they owe $25,000, their credit score's in the toilet, even if you're making your minimum monthly payments. The reason for that is you become a higher risk to them. And as your credit load versus the limit, so if it's basically, you know, $25,000 versus $25,000 limit, you're a high risk of defaulting. I always tell people that if you want a good credit score, you really need to do two things and two things only. Is pay off your bills every single month in full, never carry a balance, and it also lowers the risk factor of defaulting and ending up in problems when life happens to you. And number two, never charge more than 50% of your limit. Because as soon as you get close to 50% of your limit or higher, that's when your credit score starts to go south. Okay? So we talk to a lot of people on a regular basis that believe that just because they're throwing some money at the debt and placating the credit card companies, they've got good credit. I've got good credit, I'm worth something. But when we ask them, that's great, what's your credit score? They don't have a clue. They have no idea whatsoever. So this system here, this is a relatively fail-safe system. It's not 100% accurate, but it gives you a good idea of what your credit score looks like, what you can expect it to look like if you run your credit report. So I invite you to leave a comment below. Let me know what you think of that. If you have any other special requests for videos in the future, I'm happy to take a look at the comments and jump in on it, or answer questions with you guys. But ask yourself this question, if you've been carrying debt for a long period of time, one, and two, you're not seeing the balances come down because what you're doing really isn't working. Don't believe for a second that you've got great credit. Even if you're making those minimum monthly payments, you don't. I guarantee you've got a very low credit score. And if you don't believe me, go to Equifax.ca if you're in Canada, pull your credit report with the score included. I think it's around $20, $25 last time I checked. I usually pull mine every couple of years just to check where I'm at. And it'll tell you what your credit score is. So there's no uncertainty in your mind whether or not you've got good or bad credit. But at the end of the day, if what you're doing isn't working and your debt isn't going down and it's going to take longer than a couple of years to pay it off, I recommend you give us a call. Talk to one of our people in the office. They'll give you a free consultation and let you know what some options look like for you. Our option might be one of them. They might recommend something else for you, like a consolidation loan or bankruptcy or something else. Hope that video helps. We'll see you guys in the next one. If you have a special request, leave a comment below, smash the like button, and subscribe, of course. And if somebody needs to see this video, show it to them. Let them know the truth about credit score. Talk to you guys later.